Dear students, we will solve one more problem on final accounts of non-trading concerns. This is video number 18. I am Dr. Panduranga Nayak, Principal, SVS College, Bantwal. Problem number 16. Receipts and payments account is given. With the help of that, you have to prepare income and expenditure account as well as balance sheet. Additional information is also provided. In this problem, they have not given the opening balance sheet. They have not given the capital fund. Therefore, we need to prepare opening balance sheet also. First, we'll look at the adjustments. Along with that, we'll also look at the receipts and payments account. The first item of adjustments is the subscriptions received include subscriptions received are 2,800. These include 100 rupees for the year 2012. Here you need to prepare the final accounts, income and expenditure account and a balance sheet for the year 2013. Whereas subscriptions received here given in the receipts and payment account includes rupees 100 for the previous year, that is 2012. So 100 rupees are to be deducted, and this will come to the opening balance sheet asset side. But 400 outstanding for 2013, that means for the current year, and therefore these 400 rupees are to be added to subscriptions received in the current year. And not only that, this will come to the balance sheet asset side. Rupees 150 for 2014 received in advance. So this is not the income of current year. Therefore, subscriptions of rupees 2,800 include this 150. These are to be deducted because that is not the income of current year, and it should be shown as a liability on the liability side of the closing balance sheet. Salaries unpaid for 2013 175, that means for the current year 175, so that should be added. Insurance prepaid 30, so of the insurance amount here, for example 120, yes, 30 rupees are prepaid. Prepaid means it is for the next year. Actually it is not the expense of the current year, therefore it should be deducted, and in the balance sheet it will come to the asset side, whereas unpaid salaries will come to the liability side. One half of the entrance fees is to be credited as revenue. You just find here entrance fees 5,000. Of these 5,000, you have to take 50%, 2,500 as revenue, and the remaining to be added to capital fund. Life donations and life memberships are to be capitalized. You find here donations and life membership, both are to be capitalized, not to take it as income in the income and expenditure account. Interest accrued and not received 120. Interest is earned but not received, so it should be added to interest account here. Interest on securities 300, to that you have to add. Yes, so that should be added, and again in the balance sheet that will come to the asset side because it is the income to be received. Sports materials are valued at 730 and bar stock at 400 at the end of the year. So sports materials 730. So you have to find out what are purchased here. Sports materials 1,200. Opening balance is not there, but at the end of the year the value is 730. Therefore the remaining balance is depreciation. Bar stock. So this will come to the closing balance sheet, sports materials at the end of the year, and bar stock also will come to the closing balance sheet. And regarding bar stock, you find here bar expenses and purchases 1,500. So in the income and expenditure, what you have to do is bar expenses and purchases 1,500 to the expenditure side, less bar stock at the end of the year 730. 400. So remaining is nothing but bar consumed during the year. Similarly, you find here bar receipts. This will come to the income side. Let me repeat. bar receipts will come to the income side of the income and expenditure account, whereas bar expenses and purchases will come to the expenditure side, but you have got closing stock of that. Therefore, bar expense and purchases 1500 minus 400 rupees here, that is 1100 are to be debited to income and expenditure account net value. And in the closing balance sheet, both these will come to the asset side, sports materials as well as bar stock. Alright, I have explained the adjustments. Now look at the receipt side. Live membership balance brought down. This will come to the opening balance sheet. Live membership fees will come to the closing balance sheet. Specifically, you are asked to capitalize that. Donations also to be added to capital fund. You are asked to capitalize. Entrance fees 50% to the income and expenditure account credit side, 50% to be capitalized as per the instructions given in the problem. Tournament fund, this is a special fund, so this will come to the closing balance sheet liability side, and any additions during the year to be added. Here no such additions, I believe. And then any expenses like tournament expenses, these are to be deducted. The remaining value is balance of tournament fund. Alright, next two subscriptions, so 2800. Regarding this, I already told you last year's amount if received deducted, this year's outstanding should be added, next year's subscription received if included to be deducted. Bar receipts to be credited to income and expenditure account. Interest on securities, it is a revenue, so to be credited. Of course, adjustment is there. Cricket fees, tennis fees, sundries are to be credited to income and expenditure account. Land and building, so it's an asset to be shown on the closing balance sheet. Tournament expenses, I already told you, to be deducted from tournament fund on the liability side. Furniture will be the balance sheet item. Purchase of sports materials, balance sheet item. Therefrom, you have to deduct depreciation. The remaining value you have to show. Salaries, telephone expenses, insurance, cricket expenses, tennis expenses, billiard expenses. These are to be debited to income and expenditure account. Bar expense and purchase also to be debited to income and expenditure account, but therefrom you have to deduct the closing bar stock. Securities purchases, this is nothing but investment, will come to the closing balance sheet. Balance carried on, closing balance of cash, this will also come to the closing balance sheet asset side. Opening balance will come to the opening balance sheet, whereas closing balance will come to the closing balance sheet. Now look at the solution. I have explained everything. So you find here 7,000 opening balance of cash, and outstanding subscriptions here they have given 100 rupees, so that should be taken there, and the balancing figure is nothing but capital fund. No other items are there in the opening balance sheet. Come to the income and expenditure account. Subscriptions 2,800. Of that 100 is for the last year. This is not the income of current year, deducted. This year's subscription outstanding 400 added. 150 of next year which are not earned, not accrued, so that should be deducted. So subscriptions for the current year is 2,950. Entrance fees, half is to be taken as income as per the instruction. Bar receipts income. Interest on securities 300, add outstanding, so 420. Cricket fees, tennis fees, sundries, so all these are to be credited. Now come to the expenses. Salaries 1,300, add outstanding 175. Telephone, no adjustment. Insurance, which includes prepaid, so deducted, and this 30 will come to the asset side of the closing balance sheet. Cricket expenses, tennis expenses, billiards, bar expenditure and purchases. Of course, from that you have to deduct stock of bar. So these things. And depreciation on sports materials 1,200 purchased, but closing stock is 730. That means the remaining amount is nothing but depreciation. As a result, If you compare the two sides, balancing figure is 4070 surplus. Surplus is nothing but excess of income or expenditure. If expenditure more than income, then we say that deficit. Now come to the balance sheet. Outstanding subscription for the current year 400, prepaid insurance 30, outstanding interest 120, cash 9,820. All these I explained. Investments 6,000 is set. Bar stock. Sports materials 1,200 purchased, but depreciation is there 470. Therefore, remaining amount is 730. And then a furniture 1,300. Land and buildings 24,500. Look at the liability side. Outstanding salary 175. Subscriptions received in advance. This is relating to next year, therefore it is a liability. Tournament fund 1,500. If there is any addition, that should be added there. If there is income on investment, then that should be added. And then expense, here of course tournament expenses 1,200 to be deducted. So 300 is the balance. Come to the capital fund. Opening balance 7,100. Donations 25,000. You are asked to capitalize that. Donations and life membership fees. Entrance fees 50%. And surplus which you get in the income and expenditure account 4,075, that is also to be added. So 42,675 is the capital fund balance at the end of the year. So total of the closing balance sheet is 43,300. And that's all. Thank you very much.